What does a mortgage credit analyst do? A mortgage credit analyst is responsible for evaluating the financial information of individuals or businesses applying for a mortgage loan in order to determine their credit worthiness. Here are some key tasks a mortgage credit analyst typically performs. Number one, reviewing credit reports. They assess applicants' credit history, including credit scores, payment history, and any outstanding debts. Number two, analyzing financial documents. They examine income taxes, tax returns, bank statements, and other financial documents to evaluate the applicant's eligibility to repay that mortgage loan. Number three, assessing risk. They measure the risk associated with lending to the applicant by evaluating factors such as debt to income ratios and loan to value ratios, as well as employment history. Number four, compliance and regulations. They ensure that mortgage applications comply with federal and state lending regulations and guidelines, such as Fannie Mae and Freddie Mac standards. Number five, recommending loan approval or denial. Based on their analysis, they recommend whether the mortgage should be approved, denied, or modified to reduce the risk. Number six, communication. They may communicate with loan officers, underwriters, loan processors, and customers to clarify financial information to make the right decision. The goal is to minimize risk for the lender while ensuring that applicants who are eligible receive fair access to mortgage financing.